Hello, we're coming to you today from California, so I apologize if there's a little wind noise or any other background noise. Not sure, haven't listened to the recording yet, but we'll see. The wind's starting to pick up. The market's having quite a strong day today, and we like to see that. We are largely invested in the current market. However, we have a quite sizable cash position, around 20%, and despite the rally today and despite the optimistic news around Russia and Ukraine, we're going to remain still patient with that cash. Why are we going to remain patient with that cash? Well, we see two reasons that warrant some hesitancy and some continued patience. The first of all, and first, I guess, most immediate and important, given what caused the market to rally today, Russia and Ukraine. While today was certainly a positive step, we're seeing Putin talk about moving troops, ultimately the best thing that could possibly happen. We're hesitant on calling an end to the Russia-Ukraine tensions. And there seems to be quite a lot of hesitancy, particularly from the White House, around saying that Putin has actually begun to move these troops. So we're remaining hesitant with regards to that. We're also seeing, shortly after the United States said that, cyber attacks in Ukraine, Russia moving planes to Syria and beginning naval operations in the Mediterranean, more west than they had previously been. They'd previously been as far west as the Russian border. So there are signs of possible escalation, and there are signs of possible de-escalation. Now, ultimately, I don't think Russia-Ukraine is a huge thing for U.S. markets, but it will certainly have an impact on oil. It certainly will possibly instill some instability that we don't want to see. And in a normal environment, that's okay. And we can definitely deal with a little bit of instability. That's, find me a time when the market's stable, and a week or two later, we'll be in a downturn because things got too comfortable. So not being too comfortable is definitely a good thing. However, any sort of instability right now is going to be amplified by the Fed, which we talked about last week in our previous patient stance around the Fed, was actually quite hawkish, at least in our view. Was quite hawkish. We saw the idea and the shift towards possible intra-meeting rate hikes. We heard Bullard yesterday, and I apologize for no video yesterday, but we heard Bullard yesterday talk rather hawkishly and talk about how we can remove stimulus at the same pace that we had brought it up previously. So definitely things that we have to consider in the market with regards to the Fed. So tomorrow, we get FOMC minutes. Let's see what those minutes have to say. Let's see how the market reaction is, because if it's hawkish, I love the 10x growth stocks, but it's hard for them to move 10% in a single day. We still have them. They're still part of our portfolio. And once this patient period with cash ends, we're going to shift that cash into these stocks, at least a good portion of it. But I see reasons to be a little hesitant, to remain a little patient, and because of that, I'm going to do so and see what happens. So, rather short video today, just about 3.5 minutes. Two big important things that we're taking a look at right now and remaining patient on. Russia, Ukraine, we're not convinced. We think being patient is warranted. The other is Fed talk. We had the hawkish Fed talk on Monday. We have the minutes tomorrow. We've got several other Fed members and governors talking throughout the rest of the week. Let's just let them talk, hear what they have to say, because the trend has been hawkish. We had the early January on December, but occurred early in January inflation read. That led to a market spill. We have yet to get to a new local high. I'm not talking about absolute high, local high. We had that kind of double top looking thing in terms of technicals. Obviously not a technicals guy, but in a market so much driven on sentiment, I think it's quite important. And that seems to only be having negative fundamentals. Obviously, we've seen Google and Apple and Microsoft have fantastic earnings, and hopefully other companies will have fantastic earnings too. The economy is obviously remaining strong, but the Fed, which has propelled the market for a very long time, has not just begun to slow down. That, I think, would be one thing, but it's actually gotten meaningfully more hawkish. So we're definitely taking a look at that. We're definitely taking a look at Russia, Ukraine. And that's today's video. So until next time, peace out.